In this example of a gap up, we have a mixed uh, situation in the proximity group, and we have some very typical things that happen in as far as location goes for the lines in the proximity group. And we have a down touch in the trend chart, and we have about, I think if I counted correctly, 14 right leg W patterns. And so flipping over to the chart, I'm going to show you MYGN, and this is on May 2nd, 2017. And you can see down here in the power chart that we have, let me go back here, red, power red is obviously the highest. That's in a TOC higher pattern. And when we look at it like this, we see that pink and blue are in a TOC higher pattern, and white and yellow are in a 2-3 day up pattern. Both of them look like they're up 3 days, yes. So white and yellow are up 3 days, and pink and blue are in a TOC higher pattern. Those pairs are split, with Zion in a TOC higher pattern, down touching 0 and green almost at the same time, with power green at 0.05 and power orange at 0.13, both of them under 0. So that's a 0.08 spread, which again is normal. We deal with up to about 0.15 spread. It does go higher than that, but we like to see it in that range of under the spread between green and orange. We like to see it under 1.5. And it can go up to 2.5 when you have, it can go up to 2.5 spread. I mean, huge. That's 10 times that. When it has 3 days up, or other patterns like that. In the trend chart, we obviously have trend trio, blue, pink, and yellow above 0, but note that green and orange are under 0, and swing red and green are also under 0. So there's divergence in location between the swing, between the 7 short-term trend lines, or I probably better said between the 3 groups in the short-term trend lines. The trend red is also down, and it is important, or I consider it to be important, that trend red went under green, because then it means red has down touched the blue in a TOC higher pattern, and you had divergence between red and gray because gray continued going up, whereas red and green went down. And looking over to the other charts, we've got price green at 127 and red at 124. So that falls in that category above 120, which is an excellent range for that to be at. You've got swing pink in a right leg W. You've got swing yellow in a smaller right leg W, but it's still a right leg W. And you have swing. Now here's one important factor, and I just track it in the price chart, and that is when price red and green are equal 2 days, which they are today. Price green is at 127.07, and yesterday it was the same. Those 2 lines are equal. When that happens, you usually can expect something pretty strong, especially when you have supporting evidence to go along with it. Zip yellow is equal. Swing Zion is equal. And so when you have, in this case, 3 equal lines indicator lines, of importance. I mean, and the reason it's important in the in the zip yellow category is because zip blue and zip yellow are far apart. And if you've heard me talk about when those two separate, because they almost always travel together. When zip blue and zip yellow separate, when they come back together, when blue and yellow come back and touch each other and travel together, there's strong price movement. Typically, you'll get 2 or 3 strong candles that'll bring the two lines back together. It basically causes price movement. But in this case here, we got a really big gap. And by the way, this gap here, today it closed at 1868, and it opened the next day on the gap at 2088. So that was a gap up of about $2.20, and then it went up and closed at 22.50, which is about another $1.70, or about $1.70, a little less. So that is a significant move. You're pushing almost $4 by the end of the day on that particular move, and you had one of the things that I will see as contributing factor is right here. Your trend blue, pink, and yellow, they're pretty darn high. Oftentimes we see them close to 0, but trend blue right now is at 10. And so that's when the higher it goes, typically the stronger the movement is. So in that particular case, or in this particular case, we have the pattern within the power 4 group. All 4 are above 0. Zion is above 0, but Zion is divergent to white and yellow in this case, and it's also under all 4 of them, but it is above green, and it's down touching green and down touching 0 at the same time. Whenever you have one indicator doing 2 things, that usually is indicative of a stronger movement. And in this case, we obviously, a $4 movement from previous close to the end of day closing is really nice. But keep those those lines equal in mind, because you can set them on a scan and just pick them up right there and then. You obviously need to do those scans under the 330-minute format. If you haven't heard me talk about it, the trading, the exchange is open 6.5 hours, which is 390 minutes. And if you do your stuff at 330 minutes, it gives you an hour to locate gaps. So, and I've got videos done on those if you need more information on how to set them up and things like that. So a lot of right leg W patterns here. I think that's obviously is one of the most prevalent patterns that we see on this movement, and it's just an excellent example of a gap, both in the power 5 grouping and as well in the trend red, green, gray grouping. And obviously we have supporting evidence. One of the things that see that it might be an opposite is that zip Zion is highest. But remember, the rule is it needs to be highest and going down. And so zip Zion tracks buyers in. There's a lot of buyers going into the market at this point, simply because we see that it's highest, but we don't have price movement to go along with it, and that of course comes the day after the vertical green line. So again, an excellent example. This one being a little different in its format, with the power 4 having two in one pattern and two in another pattern, but we did have the divergence with the power Zion, and that is typically we see that going down, and in this case it down touched the 0 or down touched the green. Power Zion actually landed on 0, 0.00. So, and then power green was minus 0.05, so it's like it down touched both of them at the same time, and hence we see the reaction. So there, once you begin to see the pattern layout, and by that, remember there's two things in the proximity group to keep an eye on: the pattern layout and the pattern shapes. You've got 7 shapes that we like to see that the lines that the pattern 4 specifically should be in, and those are described in the proximity group layout. They're identical to the visual shapes and signals that we see elsewhere, but the grouping is oftentimes in a divergent situation, and by that I mean power Zion is under the power orange line, and we don't count the 0 line in divergence. The 0 line we do count in price direction within the power chart, because the power chart, when the lines are above 0, price tends to go up. When it's under 0, price tends to go down. But the divergence between the power 4 and Zion, for example, is between the power orange line. Also between the yellow and the power 3, pink, blue, white, versus the yellow. Sometimes you'll see yellow above and the 3 under, or vice versa. So that, and then again you'll see the power 6 all above or all under. When they're grouped all together in one spot, when you've got divergence in location with the Zion line, or the power yellow line, or you have divergence with Zion going down and the power 4 going up, those are key location pattern elements to probable gaps. They don't tell you that that's going to gap. You got to verify the patterns, which are normally okay, but you need to verify the pattern that you got, because there's a lot of lines moving, above or under, but they don't have the pattern set up, especially in the trend chart or in the indicator count chart. So you got to have all 3 patterns, identical indicators, 12 or more generally in 1, 2, or 3 pattern groups. You got to have the down touch, or what we refer to, some people might say it's an exception, but it just happens so much. There's so many times that trend red and trend green are in what we refer to as a sky touch. They're either in a 3-day up pattern, or they're in a BOC 2-day pattern, meaning down, up, up. And when they do that, they're both of them are normally above the blue line, and the trend trio, which is the higher blue line, when it's above 0, is normally above 0 when that happens. So that's a lot of information, but if you've listened to a number of videos, you capture this stuff real easily, and that's critical to understanding the situation, because it's easy to count the identical indicators, and it's easy to count the down touches or the sky touch, or see the sky touch, I mean. But the proximity group just has a lot of flexibility to it, and it's not always as easy to see. But by putting those pattern locations together along with the 7 shapes that patterns appear in, things just start mentally clicking together, and you begin to see and identify when you have a gap. Just looking at the videos and seeing these gap examples will just give you a huge percentage of those repetitive positions that the power 4 are in when they gap. So again, great example here in this particular symbol of MYGN.